Good morning, everyone. My name is Roger Scott, and I'm the Senior Strategist for WealthPrest. Welcome to the Midweek Roundtable. I have our usual co-host, Jeff Zananeri, our usual troublemakers, I like to call it, he and I together. Oh, boy. Jeff, how are you doing today?
I'm great, Roger. How are you, sir?
Good. You were just telling me before this. We logged in a minute ago. Jeff was just telling us how he got his first shot. Very, very happy to hear that. That's great news.
Yeah, it's good news. I mean, I get shot. I get the flu shot every year. My kids got all vaccines just to go to school. So, science has gotten us this far, and whatever.
I got mine. I got my second shot about 3 weeks ago, give or take. It's also the same one, the Pfizer. Did you feel anything at all?
I got a little bit of a sore shoulder this morning that I'm nursing, but other than that, normal.
Yeah,
energy is good.
I took the next day, your day now, the second day, I took a couple of Advils, Tylenols. I took a couple of Tylenols, and that made the arm go away, and that was it. And then the second one, I didn't feel anything.
Yeah, but, it's all good.
But now a lot of people are getting the Johnson & Johnson one, which is kind of interesting. That seems to be making headways.
My wife got it. My wife got the J&J one. It made her sick. She was like nauseous the next day. She was like physically puking. One and done seems fine. My suggestion is this. I'm in my mid 40s, so they opened it up for me like literally last week. And so I was shocked that I could get it so quick. I found this aggregator in Florida that shows you openings. I like to find the algos. I use algos in my life. It's just a better way to live, right? But I figured let me just get it. And the big thing is this. I wasn't like a scared Sally. I've been kind of living a pretty active life, cautiously wearing masks, etc. But going to restaurants, stuff.
Yeah.
I visited you guys and
right. I was
hiding
just
under a rock.
No, not at all. You've been very reasonable.
But I think the world, and this is like probably an interesting way to segue into stock talk. I think the world is going to move towards some sort of, and even though the guys I like DeSantis, et cetera, are pushing against it, the world is going to move to some sort of vaccination. You have to prove you got a vaccination passport. Passport may be not the correct word.
Yeah.
But I could see a thing where you want to go to a sporting event, show us the card or on your iPhone.
Oh, vaccination. This has been, I don't know how much you've heard of this, but there's been a lot of talk about that. There's been a lot of, matter of fact, we have my wife's friends live across the way, and they were completely anti-vaxxers. They were like, we're not going to get no matter what. And she's a travel agent.
Yeah.
And now what you were just talking about, and now she's like, I'm going to get my shot. I want to travel. So, no, absolutely. They're talking about it. They were talking about making it on a federal travel passport. Exactly what you're saying right now. So this is, it makes sense. It makes sense.
So they're going to have, there's a big thing with the cruises that just came out last night. The cruise lines have been ripping. I don't know if you've been watching the stocks, but they've been just ripping for days. They're up 30% in a week, and not from the bottoms, to highs, back to almost pre-COVID levels, which is still pretty insane, because I think that the industry is going to be, it's going to be tested for a long time, just because people aren't always in the back of their mind. They're going to be like, do I want to be sitting there on this Petri dish in the middle of the Caribbean when I can just go rent a townhouse in South Beach for a few days, or up in Montevideo Beach and be, it's fine. The water's nice and warm. It's going to be great. But these stocks are ripped because yesterday the CDC came out and said, as soon as this summer, we are going to allow potentially U.S. ports to launch ships.
They said that yesterday?
Yeah, a statement came out. So you can see these stocks are up 2-3%. Norwegian is up the most, because Norwegian, and this is interesting, Norwegian said that we are going to demand vaccination because there's going to be guidelines to who can get on the boat. And the one criteria is you're going to have to be vaxxed. Guess who that excludes, Roger? That excludes children, because children cannot get vaxxed.
Right.
So Norwegian, and I didn't know this because I'm not really a cruise guy, caters to seniors and older.
Yeah. They
don't have
kids.
Right. Not the Disney cruise. It's not
No. It's more of a luxury upscale, older kind of right.
So they don't care because like 80% of the guests going on their cruises are older, and they're going to be
Right.
75% of seniors are vaccinated anyway. So
Right.
something
Right.
to think about.
It's very interesting. Well, no, beyond that, it's very interesting and timely that you're talking about this today. And I'll tell you why. Because just yesterday, of all days, I did a CDC report on the airline industry because on the 3rd, which I think was it was it was over the weekend. The CDC came out and said they revised their rules on airline travel. They said that if you're flying within the U.S. and you've been vaccinated, you're good to go. And they specifically did not say anything about cruise ships. So the article also, by default, it kind of made the airlines look good and cruise ships look bad. But then now you're saying they
got pressure because Carnival.
Yes.
Out, so Norwegian came out and said we're gonna have cruises from the U.S. We're gonna do this. We're gonna have this guideline because they've been hinting at these guidelines. So they rolled it out. But Carnival, that depends on a lot of families and stuff. They're pissed off. So they're like, we're gonna move our cruises. We're going to move our cruises out of the United States, and we're going to launch from Jamaica. We're going to launch from all these other places, and we're going to start doing cruises not out of Miami, not out of Fort Lauderdale.
Gotcha.
We're going to be doing them out of these islands that are not in the United States. You're going to lose money because like my city gets a lot of money from people flying into Miami. And they stay in the Intercontinental in Biscayne Boulevard downtown.
Absolutely,
it's half a mile to Port of Miami. And then boom, they're on their luxury dream cruise.
I've done that before when I lived in California. Sure.
Normal life. It's normal life. It's a big thing for, because they stay a day, they stay 2 days, they eat in the restaurants here, et cetera. Whatever. Everybody's battling for the same bucks, man. It's like a blood sport for money right now. Absolutely. And there's a lot of money out there. So it's not.
But it's very interesting because this report that I wrote about was actually due to pressure from the airline industry that came out on March 12th. So this was a response. So it took about 2 weeks. So I guess the cruise ships like, hey, you gotta say something about us too. That's very interesting and very timely. And I'm glad you're talking about it today because I completely missed it yesterday.
Listen, that's why, people like us talk to each other. It's why that's why people at home listen to us too, because
of course we miss stuff too. Of course.
All the time. Course. This stuff is nonstop. It's nonstop. It's coming out nonstop.
So let me ask you about this. And this is something else I was and funny enough, your name came up when this is how this came up. Uh-oh. So I was doing a trade yesterday. We're talking about a trade yesterday.
Yeah.
And it happened to be a link trade, a pair trade.
Okay.
And a few people in my, we share a lot of the same, clients, customers, fans.
Yeah, for sure.
And people were like, hey, isn't that what Jeff does? And I said, yeah, that's exactly what Jeff does. So I was like, you know what? I'll bring up the idea here. The Japanese, and this is interesting, it's a global trade, but it's ETFs. It's not plastic or it's very much in line with so Japanese report came out that their spending is down 6.6% specifically as of February.
Yeah.
The US report came out, US spending is down only 1%. And US is about, and that's before that was mostly because of the bad weather. And we did have some really nasty weather in the northern part of the country in February. So I'll give them that. And they're saying, but it's going to get a lot better because we've got, pent up demand. We're getting vaccines. US is on its way up in terms of spending, especially right now with the stimulus bill coming. Japan, Bobkis, they're facing their fourth COVID reinfections.
Yeah.
So I was looking at ETFs that cover Japanese stocks, top Japanese stocks. I think EWJ was the ticker symbol.
Is a good one. DXJ is another one.
Right. And JP is another. But anyway, they're all, they all track, and it's lagging. It's like sitting right at and below the 50-day line, not really doing anything great. Yeah. Where the US is. So the idea was, in a nutshell, to buy U.S. stock market and sell the Japanese stock market.
I like that a lot, actually. I like that trade a lot. I'm bearish, basically. So I'm bearish on Japan. I put on it. I'll give you guys a money link that I just put on. I just put it on, and already it's like it's a good one. But it's Asian centric. So
Yeah.
I'm bullish on the U.S. and I'm bearish on Europe. Europe is really insane to me because they are having like you can't even like leave your house in France until May. I mean, I don't understand what the hell is happening in those places, but
Canada too. Canada. And Canada, Canada's really they bet on that AstraZeneca, and they were supposed to get it from Europe, and now there's a lot of issues with that, especially when it comes to older people. So
check this money link out.
Yeah.
Long Korea, EWY, because Korea's got huge exposure to electronics, and electronics is booming. And I still believe in this digital transformation of the whole world is still in early innings. It feels like it's late innings here for us, but even in this country, there's a lot of houses that are realizing that each kid needs a computer for Zoom classes, et cetera, because that's just going to be what happens sometimes.
How about Japanese cars, man? They're
but listen, check this out.
Yeah.
And bearish FXI. So bearish on China. China's been the Chinese and they're Chinese stocks in Hong Kong. They're not just Chinese stocks. And so China is they're Chinese companies listed in Hong Kong. So they have that double win. They're having the same problems that we're having in the US with US listed Chinese stocks, where the Chinese government is also cracking down on foreign listings. They don't want money to leave. The bottom line is they don't want money they want control. They want control of the money, and they want to keep it domestic. And if people are buying a stock in the US, they don't always feel like that money is coming into China the way it should be. Does that make sense?
It makes perfect sense.
Yeah. So they're lagging too. The Chinese stocks are lagging. And I think Japan is going to be a laggard as well, for sure. Korea, I'm bullish on. US, I'm bullish on. Europe.
Do you think Biden's
playing international?
Do you? I just want to stay on this Chinese topic just for a second. Do you think Biden's policy in the short term is going to have a major impact on China, or you think it's going to be kind of neutral?
I think Biden has surprised people by being like not as friendly to the Chinese as they were hoping he'd be, in a different tone from the Trump administration. Yeah. I think Biden is coming at it from a different perspective than Trump. Trump came at it from the business perspective of, you're charging us 25% to sell General Motors in China, and we don't care about anything that you sell us here. We barely stamp tax it at all. So he wanted to even the playing field on stamp duty in imports and exports, and didn't really care so much about human rights, et cetera, et cetera. He didn't really like harp on that stuff.
Right.
Biden is coming at it from a purely like political perspective, which is kind of good too. I think those changes need to happen. I think both were correct in their maybe not in their, like, what's the word I'm looking for? Implementation.
Right.
But in the core reasoning behind it, I think that they're both correct. I mean, you don't want people like working with slave wages in 2021 to make a soccer ball. Biden's not wrong about that.
I agree with you. And I'm also pleasantly surprised at I thought he was going to be a wimp when it came to China, and he's not. He's actually being pretty tough on them. And you are right. I agree with what you're saying. I like what's happening. The way they went about it may not be the best way, but yes.
Well, another big aspect of it, Roger, is that the Chinese themselves, what's making the stocks have a hard time, I think in particular, is that the Chinese are also giving hell to their own companies, like Alibaba, for instance. Like they are looking at some of these massive organizations and saying, we don't want $2 trillion companies over here. This isn't Silicon Valley. We don't want, who do you think you are, Alibaba? You're never going to be an Amazon. You could be a nice $500, $600 billion market cap. We'll tolerate that, but don't think you're going to become a $2 trillion. You're not going to be bigger than, you're not going to be bigger than City Hall. And so that's pressuring the investments too, because they're all money goes to where it's best taken care of. And if you have a limit on what you are going to allow happen, people are going to find other places to do stuff.
Just blows my mind away how they create something and putting a market cap and then trying to, and afraid of what they created, kind of like afraid of their own little monster, so to speak.
It kind of happens here too in like rhetoric, but we never do anything. Like you see guys on Capitol Hill going like, "Oh, Facebook and Twitter, they have too much power. Google has too much power." But then what happens? Nothing.
Nothing happens. Of course. Of course.
Of course.
Well, let's go around the world, and let's go back to the U.S. markets. Let's talk about the U.S. markets.
Yeah.
I want to ask you about biotech, specifically about biotechs, because I'm right now getting kind of bearish on them.
Yeah.
I'm seeing it as a major weak sector. I'm not the S&P has gone up, made new highs as of, I believe, yesterday, the day before. Have not seen any love from the biotechs. I'm actually seeing a lot of biotechs on 200-day moving average level. The ETF itself that tracks biotechs is what I call the twilight zone, kind of not here, not there.
Yeah.
But what do you say, neutral or actually getting a little bearish on biotech?
I think I think like biotech is a higher, it's a higher risk, higher beta proposition of what you're seeing in pharmaceuticals. And I think when we had what we had, like this big anticipation of the, the COVID therapeutics and vaccinations and stuff, the market always gets ahead of itself. And so whenever you have to say, I always like to think of catalysts, Roger, like, we had like these amazing breakthroughs, and now we're having the implementation of these breakthroughs, and now everybody's getting them. It's like, now what? Now, like, what's going to move the needle for these stocks? And then technicals take over. So if you don't have a major fundamental catalyst on the horizon, then you have to say to yourself, well, now it's purely technical. And that's where things like you look at, so you marry the two things and you say, okay, it just broke below the moving averages. One thing I really love that you teach, that I pick up for myself, and always try to like keep it as a Bible, like as a 10 commandment, is if a stock's above its moving average, be bullish on it. If it's below it, you have to start to be bearish on it. It's very simple rules like that real traders, real money managers use. But then it's like, you have to be just disciplined about it. So I'm looking at these charts and they're starting to break down, and there's no real catalysts on the horizon. So yeah, I think they could go lower, like considerably lower. I
want to give you my 5 cents on this, because this is not just specific to biotech. The reason I chose biotech is because to me it's a low-hanging fruit. So what I'm seeing, this is my analysis. I'm showing you my cards right now. What I'm looking at, what I'm seeing is a put to call ratio on the S&P getting below 70, which as you know is extremely bullish. I'm seeing extreme divergence on the S&P via the RSI that's been lasting 6 months now, and that includes the RSI being overbought. In addition to that, right now,
right?
And what I'm thinking is, if the S&P cools off, even goes to the and momentum levels on the S&P are at the highest level in 20 years, and the 50-day, the number of stocks trading above the 50-day line is at 93rd percentile right now, which is like that rubber band is stretched out like this.
For sure.
So my thought is this: I want to go for the low hanging fruits. Yeah. So if the market bounces down a little bit, just has a little blip, obviously the weakest stocks are going to fall the most because they're the most vulnerable right now. They have the most weakness. Sure. And if the most weakness is in the biotech sector, and if we're going to see a little cool off, why fight it, and why try to pick why short the strongest stocks if you can fade the weakest? I mean, if you could short the weakest ones already. So that's why I'm focused on biotech. So I wanted to see
That's how pros do. That's how pros short. I mean, you're teaching very important. Yeah, they're breaking down already. Like you're kicking over. You don't have to fight Mike Tyson to win the money. You can kick over like a drunk bum
that's
about to pass out in the street and take the wallet.
Exactly.
It's easier to take his wallet than Mike Tyson's wallet. So like I know it's a very gross analogy.
No, it's a great example. It's a great example.
But the money's, if the money's there, it's there. So for me, it's like, you've got these stocks that are like above the moving average and very strong and basing. Like if you look, we nailed this. I want to pat our backs on this one collectively. Some of these tech stocks have, especially in the semiconductor index, like Applied Materials, et cetera, they created this beautiful base. They consolidated. They had a little bit of pullback. They were always in an uptrend. They never got below the moving average. And now they're like setting new highs. And so it's like, why would you short that? Why would you short that? And like, they've had like ultra bad news. And to go back to my catalyst point, they've had like huge supply chain logistics disruptions.
Right.
And it's like, and the stocks are still technically doing amazing things on the upside. But so people are trying to short those things. And I'm looking at some of these other things that are out there, like the biotechs, like, Chinese stocks, like things that are bad. And I'm like, well, look at look, that's how you, but shorting is dangerous in general. And another, let me just say a couple of things about shorting. You should always be a little bit long biased, first of all, like in general in the stock market, because the market does tend to go higher and most stocks tend to go to up, and your upside is much larger on the upside than on the downside. A stock can only go down 100%. It can go up multiple 1,000%, whatever. So I want people out there that are learning to short to not get carried away with it. They should understand that it's a tool for hedging to balance out your portfolio. Because I think a lot of people, like, they start learning about shorting and then they forget about how the market actually works. And they just become super negative about everything all the time. And that's not really what it's about. That's not what it's for. Just something I wanted to say.
No,
I think that's a mistake a lot of amateurs make.
And I just want to add to that. And folks, if you don't trade short, remember, this should be also a warning sign for those of you who are interested in buying those low-hanging stocks right now that you think you're getting a deal. You also avoid them. If you're not comfortable shorting, just avoid those stocks. Or if you're long those stocks, get rid of those stocks.
Well, that's, people, like, I did a video on Viacom when they did a secondary of the stocks, and you saw it. And it was like the day they announced their secondary, and I didn't short the stock because it's like, it wasn't something I would do. It's a high risk, high dangerous thing. I played other things, but I knew not, I looked at it and I was like, these guys are shorting their own stock by doing this secondary. I didn't know the Bill Hwang hedge fund would blow up and his stock would go down another 50%. But what I did know, that the stock started to technically break down, and that, avoid buying it, because there were people out there that like buy the stock on the dip. So the moral of the story is, just to go back to the main point that you just made, not everything from our perspective, telling you that something could go a lot lower, it means to short it. It means you might want to wait on getting long it, that sort of thing. Or if you have some, you might want to lighten your position. As a matter of fact, there's a word for it that I use: landmines.
It's a landmine. So when we say short, it could, for you, it could be, hey, that's a stay away stock, or don't go buy because it's a discount stock. So when we talk about shorts, there's multiple ways you guys can use that information. Jeff, before I let you go, and you've kind of answered the question without me even asking you, you mentioned semiconductor stocks. And yeah, that is a lot of people are mixing, because one thing I'm saying is don't go long large cap tech stocks. And they're saying, well, Roger, aren't semiconductor tech stocks, but semiconductors are kind of their own little, it's a commodity. It's a commoditized market.
Yeah.
So folks out there at home, when Jeff and I are talking about commodity stocks, please don't mix that up with all large cap tech stocks, because there's a lot of large cap tech stocks like FANG stocks, aside from Google, that are not doing really well right now. And actually, that leads me to my next question. Do you think we're going to see any upside in the FANG stocks, or do you think we're going to have to wait till earnings, or do you think even earnings will not be able to prise them back up again? And I'm talking about the FANG stocks.
The FANG stocks.
Yeah.
Facebook's breaking out. I mean, so yeah, I don't know. It's hard to say. I think this is the thing. We're in a booming economy. Like, there's no question in the United States, we're in a booming economy, right? So for me, although some stocks are richly valued, if the economy is booming, those guys will figure out a way, because of their positioning, to extract dollars from it. So I don't think there's maybe like a lot of juice left in that squeeze per se, but I wouldn't bet against those guys with the economy booming. And Facebook's making a lot of money, obviously, from advertisement. We know that ad costs are going up everywhere. And so that's a positive trend they have. And the thing that Facebook really, I don't like Facebook in general. That's a company I don't like. So I'm going to be out there and say, I don't like the company. I don't like the business. I don't think it's a good thing. I don't think it's one of the better social media sites, but they're excellent at extracting money from the ecosystem. And something that has been kind of impressive that I've seen them latch on to is the crypto thing. And I believe the crypto thing has legs. I really do.
Yeah.
And they want to create like a mini Coinbase, another wallet. And that's, there's room for that, because Coinbase isn't perfect. But I was looking at this Coinbase, they filed for an IPO. You know how much money Coinbase makes? They make $1.8 billion a quarter. These guys
we were talking about that during lunch yesterday. I kind of like the idea of Coinbase going public. I think that's an interesting idea. I think it's gonna go somewhere. I like the idea.
Yeah, the company's killing it.
Jeff, before I let you go, do you have any parting words for folks who are watching this? Any major ideas for this week ahead in the markets? Any any low hanging fruits, things to
It's
stay
been
away
kind of
from?
a weird, like we've had crazy action. Now we're bullish again. And like you said, stretched a little bit. I wouldn't be surprised to see like a bounce back down. But broadly speaking, it feels like volatility is a little bit muted. And I think April is going to kind of be like, I expect there to be some thunderstorms on the horizon but with we've been talking like this and people hate it because they're like, you're hedging yourself. I'm like, yeah, I'm a hedge fund manager. Like that's my mentality. I think we're going to be in an uptrend. And I've been saying this all year long and we are in an uptrend, but
Yeah.
with violent corrections. And I
Yeah.
don't see that changing. I
No,
don't see that
no,
changing.
no, I don't either. I agree with you.
So you should always have some dry powder is what I'm trying to say for those violent corrections to put money to work in the names you like.
I think we're going to be kind of choppy. I think the bond market's going to get a little quiet for a while because it's been so directional. I think we're going to get a little choppy and kind of a pause. And I think that's going to give stocks an opportunity to kind of show their hands. I think a lot is dependent on earnings that are going to be coming out. But I think right now I think you're right. I'm not really seeing a lot of elasticity in this market. I'm not seeing a lot of momentum. I'm seeing more of a cautionary trade taking place. Jeff, this was a wonderful, wonderful session as usual. Thanks for letting me pick your mind a little bit. I do appreciate it. Folks at home, for those of you who want to get in on this conversation, who want to join us, please do reach out to Jeff. It's jeff@joyofthetrade.com. That's jeff@joyofthetrade.com. If you want to reach out to me, support@marketgeeks.com. It gets to me really, really quickly. Thanks for being on here, Jeff. Really, really appreciate it. And have a wonderful, wonderful day. And I'll reach out to you later in the week.
Take it easy.
Bye, guys.
Happy trading.
Bye, guys.